Hello traders, Gary Wagner here. Just about 1 o'clock in Honolulu, 6 o'clock in New York. It is Friday. Happy Aloha Friday, as we say on the islands. January 31st, 2020, and this is the Daily Report for Gold and Silver, our weekend review, and what a day we have seen with a virtual meltdown in U.S. equities and higher pricing in the safe haven assets such as gold and silver. The Dow Jones Industrial Average sank over 600 points on the day. NASDAQ and S&P had similar losses, although not as sharp, and we saw nice rises in the precious metals markets. First, let's take a look at our price board, and then we'll look at our technical studies and detail our current trade. Traders, we did see moderate rises in the precious metals markets in regards to silver and gold. Platinum and palladium did close fractionally lower in the case of palladium and down almost 2% in platinum. We are looking at the most active April contract. They have just switched over. So what you're seeing is the current pricing on our current trade, which is $1,593.40, putting it up $4.20 on the day. But look at spot. Spot gold is at $1,589.69, up $15.79. And a lot of that, a good portion of that, is due to dollar weakness, which lost about 0.5% on the day. Silver also did close higher on the day, but fractionally about 4 cents, but above 18 at 18.03. Palladium, in essence, unchanged on the day, 2,215 and 50 cents. And then platinum dropping like a rock, down $18.20 at 962.30. Let's take a look at our technical studies. Traders, we did have a very nice move in gold today, $15.9340, putting it up $4.20. You might ask when you look at this chart, how come when we look at the open to the close on the chart, the open is 1580, the close is 1593, a $13 move. That is the net result of this continuous contract because it is now taking data from the April month rather than the February. Nonetheless, we do have this market moving higher, and most importantly, with the current scare of the coronavirus, we saw the U.S. equities markets really get hit hard. When we look at this gold chart, what we can say categorically is it is remaining above this current trend line that we have been using as basically an index to tell us to stay long this market. Now, we have to also acknowledge that the high that came in is just about $1 below this 75% level, which comes in at $14.95. So we want to watch carefully what market action we see next week, because if we see the market continue to the upside, and most importantly, we get an effective close above 94.10, then I believe we're going to be able to achieve our original target, which is somewhere between, call it 1610 and 1613. Of course, the automatic Elliott wave is looking for higher prices, roughly at 1630. And then if we compress this chart, you'll see that there is another call of a fifth wave going to 1740. So that's all over the board. This market, though, has been headed higher. We have seen this market gain ground on a pretty consistent level. And most importantly, we have an effective trend line to follow. Now, of course, we are long this market. We have some very small profits in this market. My recommendation is to maintain your current long position, to maintain your stop. And as I said, the key is going to be how we see gold react next week, whether or not it breaks through this price point here, because that could help us identify what type of correction we are currently witnessing. I have just put up an illustration of the 6 corrective patterns. Of course, by no means are these all of them. And we normally assume that a basic ABC correction, commonly referred to as a zigzag, has the B wave come in under the top of the A wave. But there's also one that is called an irregular. That is the example to the far right on the upper corner. And in that case, the B wave actually extends far above that of the A wave, which means that we could see this market, if we get that type of a pattern, go to 1613 or higher. But for right now, what is important is how it reacts here at 1594. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you on Monday for the next daily update and review. Bye-bye.